Thank you for joining us at xm.com. You're watching today's Daily Market Comment by Haralamos Bisuros. I'm Cristina Marujos. The U.S. dollar continued to weaken across the board yesterday, with a slide extending into the Asian session today as the Fed watered down its forward guidance, prompting investors to price in a pause at the next gathering. The committee delivered the broadly anticipated 25 basis points hike, but in the statement accompanying the decision, officials said that in determining whether more hikes may be needed, they will consider the cumulative tightening of monetary policy, the lags with which policy affects the economy and inflation, and incoming economic and financial developments. In other words, they turned data-dependent, with Fed Chair Powell confirming that at the press conference he held after the decision. However, he also said that the process of getting inflation back to 2% has a long way to go, and that they remain prepared to do more if warranted. The softening of the forward guidance pushed the U.S. dollar lower initially, but the currency found some footing during Powell's press conference, perhaps as he refused to close the door to a June hike. Today, the central bank torch will be passed to the European Central Bank, which is also expected to hike by 25 basis points, a move which may come as a disappointment to those expecting a bigger increase, and thus the initial reaction in the euro may be to the downside. However, President Lagarde has been repeatedly emphasizing that underlying price pressures remain elevated and that she and her colleagues need to do more. Thus, should she appear hawkish today, any decision-related slide in the euro might stay limited and short-lived. The divergence in monetary policy between the ECB and the Fed could continue to benefit euro-dollar. For the uptrend to start being seriously questioned, investors may need to see signs that the ECB might underdeliver or be convinced that the Fed will not cut rates later this year, even if it doesn't proceed with any more hikes. Strangely, Wall Street finished yesterday's session in the red, despite the market fully pricing in a pause at the June FOMC meeting. Perhaps investors remain more concerned about the performance of the U.S. economy. The blend of economic concerns, sliding Treasury yields, and a weak dollar allowed gold to shine again. The precious metal nearly touched its record high before pulling back during the Asian trading session today. With investors remaining fearful about a recession in the United States and expecting a series of rate cuts later this year, the precious metal may be poised to turn north again soon and eventually enter uncharted territories. Thank you for watching the Daily Market Comment here at xm.com.